Good evening to all of you. I hope all well. Today topic is the module 3 of our study material, in which I have to cover from chapter 14 to chapter 24. Almost 11 chapters are there. We will be able to easily complete. Some of the most important part we will take care. Okay. So first I'm discussing the import and export. So for import and export, what is the definition? The definition is very simple. If it is for goods, it means export means from India to out of India, and import means from out of India to India. Whereas if I'll talk about the services, for export of services and for import of the services, there are multiple conditions. For export, it will be treated as export if the following conditions are satisfied. For example, export, there are the 5 conditions. The condition number 1, supply should be in India and customer would be definitely out of India. Recipient should be out of India, correct? And the place of the supply should be out of India. This place of the supply would be determined according to section 13 of IGST Act, correct? Then amount should come in the foreign currency, or wherever permitted, it can come in RBI, it can come in INR, permitted by Reserve Bank of India. It is not transaction-wise approval. It is more or less like Nepal, Bhutan, Vostro account. They all are the permission. All are permitted by RBI. And last is very important, supplier and the recipient should not be the merely establishment of distinct person. Should not be the merely establishment of distinct person. In accordance with explanation 1 to section 8. This part is important. We will do the slight discussion on this part. See, what does it relevance in accordance with explanation 1 to section 8. But for import, there are only 3 conditions. But for import, there are only 3 conditions. Please note, with respect to payment, there is no condition. With respect to payment, there is no condition. With respect to relationship, there is no condition. For import, supply should be located out of India, recipient should be in India, and the place of the supply should be India. Can anybody quickly tell me who will pay the tax in case of import of service? Can you please quickly tell me who will pay the tax in case of import of services? Absolutely correct, Viraj. The importer will pay the tax, and that to be called as reverse charge mechanism. That to be called as reverse charge mechanism. Correct? So now there are 2 possible routes for exporting the goods. And this two route are same for supply to the SEZ unit. So it means if I'm exporting the goods or supplying to the SEZ unit, there are 2 possible route. It is applicable for export of services. It is applicable for SEZ supply for goods or services. It means I'm talking about 0 rated supply. You can do the export on payment of IGST and take the refund of IGST paid. And you can export without payment of IGST, for which you need to file the letter of undertaking. This letter of undertaking is before supply. It is before supply. And please note, it is not transaction wise. It is only one LUT for one financial year, will applicable for all 0 rated supplies. And can you take the refund in case of LUT route? Answer is yes. Whatever the GST I have paid at the time of procurement. So suppose I am exporting the goods or services, or SEZ goods or services. Then if I have opted LUT route, I am not required to pay any GST. But yes, whatever the ITC being accumulated, I can take the refund. Now this part is very important. We'll try to understand. Now, in case of export of services, I have discussed that there are the 5 conditions, and in the 5 conditions, In the 5 condition, the 5th one is talking about supplier and recipient are not merely establishment of distinct person. What does it mean? This is only point. This is the point which I like to discuss with all of you. And they are seeing the reference. They are giving the reference of section 8 explanation 1. But crux, I will tell you, if you are holding and subsidiary company, then you are not merely establishment of distinct person. You are not related party. This condition is satisfied and your transaction would be export or service. मैं repeat करता हूं. The supplier and the recipient should not merely establishment of the distinct person in accordance with explanation 1 to section 8. Should not be. So holding and subsidiary relation is not merely establishment. And if that they are not merely establishment, it means the transaction between them will be the export. Further, one relation, let's say the holding company, the main HO is located out of India, let's say UK, and they have set up in India not separate private limited company. Might be they have done the setup in the India as a branch, as a agency, or as a representative office. In all these cases, branch will be treated as they are the merely establishment of the distinct person. And if they are the merely establishment of the distinct person, the transaction, the 5th condition is breached, not satisfied, and therefore the transaction between HO and the Indian branch will not be treated as export of service. Let me go back. So I was talking about this export of service, the branch office in India, agency in India, or the representative office in India, and they are providing the service to out of India, their main company. Will it be export or service? Answer would be no, because 5th condition not satisfied. No export of the services. But at the same point of time, if you read the exemption notification, you will find that this service is exempted in the GST. So actually there is no tax implication, but only point, instead of export, it will be treated as exempted. But subsidiary and holding company, they are saying the circular has also been issued by the CBIC. They are saying this is continued to be considered as satisfied 5th condition, meaning they are not the establishment of distinct person. And if they are not the establishment of the distinct person, it means they have satisfied the 5th condition. Read the explanation 1 and explanation 2, section 8. Only I am discussing the relevant part. Establishment in India and establishment outside India. If there is an establishment in India and there is an establishment outside India, then such establishment shall be treated establishment of the distinct person. Further, they are saying if the person carrying the business through the branch or agency or the representative office in any territory, in my example, I have given that they have the Indian setup as a branch or agency something, then it will be treated as establishment of in that territory. So if they have the establishment in that territory, let's say in India, and any other establishment outside India, then they are the establishment of the distinct person. What is the conclusion? If you are having the setup in India as a branch office representative agency, then it is the establishment of the distinct person. And if it is the establishment of the distinct person, then they are not export of service. I hope it is clear. If you have any question, kindly ask. Now, section 5, subsection 1 of the IGST Act, it is basically levy. So, levy means the tax will be levied on any transaction interstate. There will be the IGST. Other than alcoholic liquor or human consumption. According to section 15, the value will be value. Value means taxable value. According to the section 15, the transaction value would be the taxable value, money paid or payable on all interstate supply, but maximum tax rate can be 40%. Actual tax rate will be whatever the notification says. Proviso say if you are importing the goods, proviso says if you are importing the goods, then the tax will be paid according to the custom process. So we know that if we are importing the goods, then it will be considered, it will be decided according to the custom provision. We need to file the bill of entry and we need to pay the custom duty, IGST, cess, etc. Please note one thing. You know that last October 23, there was an amendment in the proviso to 5 subsection 1. What was that amendment? That specified actionable money, online money gaming, specified actionable claim, online money gaming, which is goods. And if the supplier is located out of India, and let's say I'm a recipient in India, I am playing online money gaming. It is goods, specified actionable claim, it is goods. Then, but this would be routed through custom, answer would be no, because it is online money gaming. How it can be routed through custom? Then they are saying other than specified actionable claim. So it means they are excluding like online money gaming, etc. these transactions. Then if you read the definition of interstate supply, 7 subsection 2 says that import of the goods means it is interstate supply. Imported into India till they cross custom frontier of India shall be treated as an interstate supply. Similarly, if you determine the place of the supply, then I will use the section 11 of IGST Act for determining the place of supply. Taxability of IC sale. Now I like to discuss 2 para of which schedule? Can anybody tell me that high C sale are whether high C sale are taxable in the GST? Whether high C sale are taxable in the GST? क्या high C sale के ऊपर GST लगेगा? Do I need to pay the GST on the high C sale? The answer would be no, because it is covered in the Schedule 3. So it means will there be any taxability? Answer is no, it is not levied because it is covered in the para 8B of the Schedule 3. But if you read the 17 subsection 3, the proportionate reversal of ITC, that is also not applicable for high C sale. Schedule 3, if you recall the reversal of ITC Schedule 3, only 2 para are covered as exempted supplies. 2 para of the Schedule 3 are considered as exempt supply and proportionate reversal will come. What are the 2 para? Para 5, that is sale of land and completed building, and para 8A, sale of goods, bonded warehouse and before clearance of home consumptions. Similarly, there is a third country shipment. This is normal third country shipment or triangular trade is a common practice in the international where the goods move from one country to the another without touching India. Then again, para 7 of the Schedule 3, no GST is payable, no reversal of ITC is required. Taxability of goods imported by SEZ unit. The goods imported by the unit or the developer of SEZ for authorized operation are exempted from the whole of IGST leviable under section 3, subsection 7 of the custom, by this notification. Export-oriented unit. Goods imported by the EOU attract liability to custom duty. Import of the goods by 100% EOU are governed by this notification and allowed to duty-free import the goods exempted from custom duty, IGST and compensation cess under the said notification. However, exemption from IGST will be subject to certain condition, fulfillment of the certain condition. Now, import as baggage, passenger baggage is exempted from IGST as well as compensation cess. The basic custom duty at the rate applicable and social welfare surcharge is leviable on the value which is in excess of the duty-free allowance provided as per the baggage rules. Import of service, I have talked about that there are the 3 conditions for servicing import of service. But for import of service, you need to again go to the section 7 as well as schedule 1. So section 7 of CGST, I'm talking about section 7 of the CGST Act, which talks about definition of the supply. Correct. In the 7 subsection 1, we have discussed in the first initial chapter that import of service with consideration, then whether or not it is in the course or furtherance of business, it will always be the supply. So it means import of service with consideration with the business, it is supply. Import of service with consideration but without business, it is also a supply as per 7(1)(b). Import of service without consideration plus with the business, is it a supply? Answer is yes, it is a supply, provided the supplier should be the related party or any of his other establishment outside India. So in import of service as per 7(4), it is an interstate supply. So what is the crux? The crux is the import of service condition. What is the condition? Consideration necessarily required, business test not required, because it is always with the supply. But when the consideration is not there, then it is a supply, provided the supply should be the related party or any of its other establishment outside India as per Schedule 1, Para 4. So these are the three conditions. Who will pay the tax under the in case of the import of services? You all have given the answer, correct answer, that it is liable under reverse charge. The recipient has to pay the tax under RCM. Then there is a concept of OIDAR. Then there is a concept of OIDAR. So that is correct. What is the concept of OIDAR? OIDAR means Online Information Database Access Retrieval Services. This OIDAR concept you will read in this chapter, section 14. You have also read this provision in the section 24 also. And you have read this provision also in case of the RCM chapter. Meaning thereby, now I will compile all the provision. Suppose OIDAR means Online Information Database Access Retrieval Services. That is section 14 of IGST Act. So if suppose you supplier is godaddy.com, I'm taking one example, and I am taking the domain, I'm purchasing certain domain. Let's say www.arunchajer.com. In that case, what happened? If I am registered, then I will pay the tax under RCM. But if I'm not registered, then as per section 24, liability would be shifted on OIDAR, Online Information Database Access Retrieval. They have to pay the tax under forward charge. Section 24 clause 11 talking about they have to take mandatory registration and pay the tax like as forward charge. If the recipient is NTOR, what does it mean? NTOR? NTOR means non-taxable online recipient, means NTOR is equal to unregistered person, yes, plus registered under section 51. Registered under section 51. क्या मतलब हुआ इसका? What does it mean? It means if the government who has taken the registration only for the purpose of TDS, they will be considered as NTOR. And if they are purchasing or they are taking certain OIDAR services, then the liability to pay the tax would be shifted to the supplier located out of India. So these are the provision. Now export definition we have already discussed. Correct. What is the zero rated supply? Zero rated supply means export. It can be goods, it can be services, and supplied to the SEZ unit or developer. Please note, this word was not there earlier and it was inserted and made effective recently. So this is very important. Now, every supply to the SEZ unit, it is not zero rated. When it is zero rated, if it is for authorized operation. If it is for authorized operation, then if you are exporting the goods or services, we have already discussed two route or zero rated supply. We have already discussed two route and you can take the refund. And the 16 subsection 3 IGST Act, it says that this condition is only for the goods. This condition is only for the goods. If person making the zero rated supply of the goods and if the realization is not being received, then they have to deposit the refund. So in case of the goods, I can take the refund even prior to the realization. See, I'm talking about the refund part, that if you are exporting the goods, then I am entitled to take the refund even before the realization. But ultimately, if the realization sale proceed is not being received by me, whatever the refund I have taken, I have to pay back to the government along with interest. That is the rule 96B within 30 days. But if it is a service case, I cannot apply the refund at all prior to the realization because I have to attach FIRC, BRC copy for refund applications. Then 16 subsection 4, they are giving the power to the government. They can notify the class of the person, they can notify the goods or services who make the zero rated supply on payment of IGST. It means now the zero rated supply on payment of IGST, that there can be some restriction. So this route is normally open to all, but it can be restricted by the government. What is the FIRC or BIRC? Viraj, I was talking about if I am exporting the services, then foreign currency has to be received, then only I can take the refund. I have to attach the FIRC or BRC. BRC means Bank Realization Certificate or FIRC means Foreign Inward Remittance Certificate. These names are mutually exclusive. Correct. See, they are synonym to each other. So sometimes we are using the word FIRC or BRC. But that is the proof I have received the service, I have received the foreign currency against my export of services. Is it clear? Now the deemed export. What are the deemed export and what is the merchant export? These are the two terms which we need to understand. In case of the deemed export, it is not that you are sending the goods to out of India. No. What is the deemed export? This section is giving that definition. It says that there will be the notification. It will be only for the goods. The goods does not leave India. Payment, no problem. It can come in Indian rupees or foreign currency, but the goods should be manufactured in India. If all these conditions are satisfied, then my transaction will be deemed export. What are the notifications which have been issued on until date? Only one notification. It covers 4 transactions. That if I am supplying the goods against advance authorization, against EPCG license, or to export oriented unit, or if I'm supplying the gold and I'm a bank or PSU, whatever, against advance authorization. These are the 4 transactions which has been notified. It is for goods only. It should not leave India. So prima facie, it appears that it is having the word deemed export. It is having the word deemed export. So it appears that the goods are leaving out of India or goods are being given to out of India. No, it is given to the advance authorization, to the EOU, against EPCG license, etc. These are the license which is being issued by the DGFT, Director General of the Foreign Trade. Then what is the merchant export? Try to understand this chart. Merchant export means Mr. A, let's say I'm taking the example, A is from Delhi, B is from Mumbai, and A is making the supply to Mr. B, and B is making the supply to Mr. John as it is. Basically, he is doing the trading. Then in that case, the B supply to the USA, this supply is export, and this supply is export, and if there are the certain condition, if it is being satisfied by A and B jointly, point to be noted that what is the merchant export? It is not defined in the GST, but in the layman language, in the nomenclature, to which transaction we are seeing the merchant export. If A is making the supply of the goods to B, and both are doing the compliance of the condition given in this notification, then the B, who is an exporter, is also called as merchant exporter. See, there is no definition of the merchant export. No, it is merchant exporter. It is not defined in the GST, but in the layman language, we are saying if he is making the supply as it is to the export out of to the out of India, and they are satisfying the condition. What are the condition? I am giving the brief, but you can check all these conditions which is being given in the PPT. That first is he will make the B will give the purchase order to A, and the copy of the purchase order has to be submitted to A's tax officer. A will make the supply to B against tax invoice. B should be registered with the Export Promotion Council or Commodity Board. We will supply the goods as it is to out of India. This goods should be directly moved to the custom port. If B like to do the work of aggregation, suppose B has purchased from A, from C, from Z, from X, from Y, from P, from Q, from R, multiple person he has purchased, then he can do the aggregation, but it will be done in the custom bonded warehouse, and they have to take the acknowledgement on the tax invoice. Who? Mr. B. Then the goods will be exported out of India, and goods should be exported out of India. After that, the copy of the shipping bill or bill of export has to be submitted again to A and A tax officer. If all these conditions are satisfied, then supply by A to B will be taxable at 0.1% only. And there is a one clarification given by the Circular 125. There is a one clarification given by the Circular 125 that in this case, A is entitled to take the refund under inverted duty structure. We will read at a later stage that what is the inverted duty structures. But yes, refund would be permissible. So this is merchant export or merchant supply to the merchant exporter. You can read all these conditions. Now let me move to the refund chapter. Just allow me 1 minute. Just allow me 1 minute. Let me start the refund chapter. But before starting the refund chapter, give me the answer. Give me the answer that in which case I can take the refund of ITC. Suppose there are the 5 points which I am given, or you can read these are the 5 questions to all of you. Read the question and tell me in which case a refund of input tax credit would be granted. In which case refund of input tax credit would be granted. So that is the question to all of you. Please give the answer. We have moved to the new chapter, that is refund. Question is in front of you. Kindly tell me in which case refund of ITC would be granted. So the answer is in none of the case. In none of the case you are entitled to take the refund of ITC. Why? Because ITC ka refund is permitted in only two circumstances. A refund of ITC is being permitted in only two circumstances. First is if you are making the zero rated supplies, you can take the refund of ITC on under LUT. Second is inverted duty structures. What is the inverted duty structures? When the rate on the input, when the rate on the input is higher than rate on output. Please note, they have used the word input. It means the refund would be granted only for the goods. You cannot take the refund of input service. You cannot take the refund of capital goods. Under inverted duty, I'm talking about. What is the inverted duty? Inverted duty means when the rate on the input is higher than the rate of output. It is the inverted duty. In this case, the person who is making the supply, which is inverted duty, then in that case, he can take the refund of accumulated ITC, but only on account of the input. He should not be doing the trading. There's one circular 135 which has been clarified that in case of the trading, inverted duty ka refund is not permitted. I have discussed just now that if one person is making the supply to the merchant exporter, what is the tax rate? 0.1%. In that case, can Mr. A entitled to take the refund? That answer is yes. They are saying that if because of the concessional rate notification, because of the concessional rate notification, if the ITC is being accumulated, you are entitled to take the refund. No problem. But in two cases, you cannot take the refund. First case is the product, if the supply which you are making is subject to the export duty, then you cannot take the refund of accumulated ITC. And if you have same supply on which you have taken the refund of IGST, then also you can't take the refund of accumulated ITC. It means on a single transaction, either to go for IGST ka refund or to go for the ITC ka refund. You are not entitled to take the refund of both the route. The GST refund is because of multiple transaction. There are the multiple transaction in which refund would be permitted. So if it is unutilized ITC on account of the export or SEZ or inverted duty, if you are paying the taxes on payment of the goods, on export of the goods, on export of services, or SEZ unit or developer, then if you are the deemed export, in case of the deemed export, supplier or recipient, anyone can go for the refund. Supplier or recipient, anyone can go for the refund. Ideally, the recipient will go for the refund. But if supplier take the declaration from the recipient that he is not going for the refund, he has not taken the ITC, then supplier can go for the refund. In case of the deemed export, you have to pay the IGST. Concept of LUT is not applicable in case of the deemed export. Then refund of excess balance, excess payment of tax. Then intrastate supply subsequently held to be the interstate supply. So we will read section 77 in this regard, or refund on account of the assessment, provisional assessment, any other ground, or UIN bodies and casual taxable person. When you read the section 54, section 54 is starting with the word any person. This is very, very important. Meaning thereby for taking the refund, one should be registered and one can be unregistered also. It means whether unregistered person is entitled to take the refund. As per 54(1), there is no restriction. If I have borne the incidence of the tax, then I can also go for the refund even if I'm not registered. So immediately you might ask the unregistered person how can apply the refund on the government portal, GST portal, right? Because now everything is online. Then how the unregistered person is able to apply the refund? Please make a note that in the GST portal, there are the three facility which is available to unregistered person. One is registration. We have discussed in the registration chapter that unregistered person can also make the supply of the goods through ECO. Second is advance ruling. So we will discuss today only. And third is refund. So in case all the conditions are satisfied and he is entitled to take the refund, then how the unregistered person is able to take the refund? There is a functionality which is being provided on the GST portal which need to be used. But as per the law, they are using the word any person. Please note that they are not using the word any registered person. They are not using the word any registered person. Any person claiming the refund of the taxes, etc., then they are entitled, but provided it should be within 2 years. It should be within 2 years. It should be within 2 years, and 2 years would be counted from the relevant date. And relevant date is different from case to case. That relevant date we will discuss at the end of this topic, at the end of this chapter only. But please note, time limit is fixed 2 years, but 2 years would be in case of the counted from the relevant date, and the relevant date is different in case to case basis. It says that provided the registered person claiming the refund of balance in the cash ledger, yes, he can take the refund in such form, such manner as may be prescribed. So because it is written in the proviso, and in this proviso, there is no word of 2 years. It means you can take the refund of amount lying in the cash ledger even beyond 2 years. The 2 year restriction is not there when you are applying the refund of cash ledger. So we have discussed. Let me start. The first two are the major category of the refund. We will discuss two category. First is export and second is inverted duty. However, there are a lot of categories, but which is not possible for me to cover in the revision class. If you have any question, we will discuss, but otherwise I'm covering 2-3 categories, which is major categories. The first is a refund of accumulated ITC in case of the export. The formula. Let's read the formula first. The refund is equal to turnover of the zero rated supplies of the goods, turnover of the zero rated supply of the service divided by ATI multiplied by net ITC. The word net ITC means ITC of input and input service. It means you cannot take the refund of capital goods if you are going under LUT. Sometimes it is being asked that which route would be opted on payment of IGST under LUT. There are multiple conditions. There are the multiple points which we need to understand. But the first point I can say that if you're going for LUT, you are not entitled to take the refund of capital goods. ITC accumulated on account of the capital goods. But if you are going for the IGST route, on payment of IGST, whatever the tax is paid, you can take the refund. It is not pointed out that whether the tax is paid was using the ITC of input or input service or capital goods. No such bifurcation is required or is there, meaning thereby if I am exporting whether goods or services, but on payment of IGST, whatever the tax I paid, whether it is paid through ITC of capital goods, input service, entire amount of the tax paid will be refunded to me. It means I can say indirectly I am getting the refund of capital goods. But if you are going under LUT route, then I can say in the LUT route, one can take the refund of net ITC. Net ITC means ITC of input and input service only. Second bifurcation could be that if I'm exporting the goods, there is no refund application required. If I'm exporting the goods on payment of IGST, no refund application. Shipping bill will be deemed to be the refund application. So if someone is exporting the goods, then he may opt IGST ka route because the refund is automatic. Can SSC select more than one route in one financial year? 100% yes. Just now we have discussed in the 54.3 on one supply. On one supply, I cannot take the refund of IGST paid as well as ITC accumulated. But if there are the two different supply, two different tax period, I can go on IGST route. I can go under LUT route. There is no problem. There is no restrictions. So we have discussed the meaning of net ITC. Now let's understand the meaning of zero rated supply of the goods and zero rated supply of the service. Please note these two words has not been combined. These are being separated. They might say that turnover of the zero rated supplies of the goods or services or both. No, they are saying goods separately and services separately. Why? Because they have defined these two terms in a separate sense, separate manner. What is the meaning of turnover of the zero rated supplies of the goods? It has been given. What is the meaning of services? It has been given. Please make sure that whatever you have the invoice, whatever you have invoice reported in the GST returns for export of the goods or services, it is not necessary that that amount will be the turnover of zero rated supplies of the goods or services. No. Why? Because only for the purpose of the refund, the meaning of these two terms has been changed or has been defined. What is the turnover of the zero rated supplies of the goods? They are saying the turnover of zero rated supply of the goods means value which you have made during the relevant period or (1.5 times) of the value of the like kind and quality, like value of the like goods and domestic is supplied by same or similar place supplier as declared by the supplier. It means suppose I am exporting the goods. Let's say I am doing the export of the rice. I am doing the export of the rice. Okay. I am able to make the export at 500 rupees per kg. But actually, when I am making the supply within India, then the same goods is being supplied at rupees 100 per kg. I am reporting rupees 500 in the GST returns. I am getting the realization of rupees 500. No problem. But for the purpose of the refund, they are saying the turnover of zero rated supply of the goods is 150. It is maximum 1.5 times of the value of the like goods domestically supplied by the same or similarly placed supplier. Then they have changed the meaning of the zero rated supply of the service. The definition we will read, but let me give the crux. Invoice or payment, whichever is later, that will be the zero rated supply of the service. Means if let's say I have exported of 1,000 rupees, I have raised the export invoice, export of the supply, the service of rupees 1,000. tax part I'm talking about, or turnover part I'm talking about. Whether 1,000 is the turnover, answer is no. For taking the refund, the turnover of the zero rated supply the service is payment based. Out of 1,000, let's say I've received the realization of rupees 600 only. Then for this month, the turnover would not be 1,000, it would be 600. What is the definition? It says that whatever the payment you have received in the current tax period for export of service, then add those services for which you have received the amount in advance. So let's say I have raised the one tax invoice in the current month, but for which amount has already been received in the previous tax period. This will be added and deducted if in this month, whatever the payment is being received, out of that, if any advance for which I have to give the supply in the future tax period. I have received the payment in the current tax period, out of which, if there is any advance for which I have not given the supply, concept is, again, in back of the mind, please remember the concept, invoice or payment, whichever is later. Sorry, I might use the word earlier. Payment or invoice, whichever is later. It means if I have received the advance, but the service has to be given in the future, tax invoice will be issued in the future. Will it be counted? Answer is no, sir. This amount will not be counted. Second example, if I have issued the invoice for which I have received the advance in the previous tax periods, it will be added in the turnover of zero rated supply the service. After calculating the turnover of the zero rated supply the goods and services, you will apply the formula. This is the zero rated supply divided by total turnover multiplied by net ITC. There was one question which is being asked and clarified by the circular. So if in case of the zero rated supply the goods, we are keeping the upper cap 1.5 times, do we take this similar 1.5 times amount in calculating the adjusted total turnover? What is the question? Let me repeat again. I have the export, I have the one tax invoice of 500 rupees. So I am making the amount as short so that it will be easy to understand. I am making the export of the rice at 500 rupees. So turnover the zero rated supply is 1.5 times. So I have calculated 1.5 times 150. But in the adjusted total turnover, I will add all the turnover, all the export, all the domestic, everything I will add. So they are saying that in this, the export which will be counted as 500 or 150. It has been clarified that whatever the value you are taking, same value you will take in calculation of adjusted total turnover. So it means the export would be 1.5 times in the denominator and 1.5 times in the numerator, both would be same. It is not different. Next is, so adjusted total turnover means the turnover in the state or UT excluding the turnover of services, and they are saying the services ka turnover would be not as per the tax invoice, would be as per the clause D. It means invoice or payment, whichever is later. Value of the, but you will exclude. What is the amount which we will exclude in calculation of the total turnover? If you have the exempt supply, you will exclude. Now try to understand what is the 4A and 4B. What is the 4A and 4B? You will read at multiple places in the refund chapter. I have not covered all these provisions, but you will find these two clauses, two subclauses at multiple places. What is that? If one is exporter, Mr. B is exporting the goods or exporting the goods, let's say to the Mr. John. And this is important. And he has purchase these goods at a concessional rate notifications. Like he has taken the advantage of merchant export wala, means he has purchased at 0.1%. He is purchasing the supply against advance authorization. So the deemed export. Similarly, there are two custom notifications 78 and 79. Try to understand if exporter who has purchased the goods at a subsidized tax rate, substantial rate notification, then first point as per rule 9610, first point as per rule 9610, he cannot do the export on IGST. This route is not available to him. He has to compulsory go under LUT route. Second point, this purchase which is made by Mr. B at a concessional rate notification, and then he is doing the export, whether he would be entitled to take the ITC refund, 100% is no problem. But in that case, when he's applying the refund, the refund would be under the separate category. It would not be clubbed under the export category. They are saying this is nothing but the rule 89 4A and 4B. This is 89 4A and 4B. They are saying this 89 4A and 4B are entitled to take the refund, no problem, but that refund calculation would not be clubbed in the export category. It has to be calculated separately. And therefore, when we are calculating whenever we are calculating the different component in the formula, in the calculation of net ITC, we will exclude the ITC of 89 4A 4B. When we are calculating the total turnover, we will exclude the turnover of 89 4A 4B. In calculation of the zero rated supply of the goods, we will exclude the 89 4A 4B. It means from all the places, we are excluding 89 4A 4B. It does not mean that they are not entitled to take the refund. They are entitled, but that will be calculated separately. And there is one explanation that if FOB value declared in the shipping bill or bill of export and value declared on the tax invoice, whichever is lower, so it means the value of the goods exported out of India will be taken lower of FOB or tax invoice, whichever is lower. So suppose you are doing the export on payment of on IGST route under LUT route. You are exporting under LUT route, and suppose I am collecting the value, I am collecting the freight, I am collecting the insurance. So my FOB value would be, let's say, 1,000 rupees. But I have collected the insurance, I have collected the freight charges, let's say 100 rupees. So my total invoice will be of 1100. I am realizing 1100. But for the purpose of calculation of the refund, my value of the export would be counted as 1,000 rupees only, because FOB or invoice value, whichever is lower. Zero rated supply means export and SEZ. Let me go back. Whereas this is the definition of zero rated supply. This is the definition of zero rated supply. It includes goods as well as services which are either exported or supplied to the SEZ unit or developer. But for SEZ, it should be for authorized operation. So let me move further. Now, what is the inverted duty structures? We have already discussed that inverted duty structure means rate of the input. Rate of the input is higher than rate of output. Correct? Rate on the input is higher than the rate on outward supply. So outward supply can be of goods or can be of the services, no restriction, no problem. But if you are comparing or you are deciding whether my supply is inverted duty or not, point number one, you will only consider the rate of input. It means you will consider the rate of goods, not the rate of services. And second is that in the refund inverted duty, only permitted is input. Whatever the ITC which is being accumulated on account of input, that you can take the refund. It means in the inverted duty structure, a refund of input service and refund of capital goods, both are not permitted. So this is the formula. Now there is a one case study which you need to solve. First, let me explain the formula. Let me explain the formula. The formula is turnover of inverted rated supply of the goods and services multiplied by net ITC divided by total turnover. This is almost same formula which we have discussed in the export. Exactly same now. Turnover of zero rated supplies of goods plus services divided by total turnover multiplied by net ITC. This is same, almost same. But in case of the export made under LUT, are they paying any tax? Answer is no. But in case of the inverted duty, are they paying tax? Answer is yes. The rate of the taxes would be lower compared to input. That is okay. But they are paying some taxes, right? So therefore, some part is being reduced. Whatever the tax payable on the inverted, this is being reduced. While tax payable on inverted rated supplies, that is not completely reduced. It is being reduced in proportion. What is the proportion? Net ITC divided by ITC of input and input service. Now, we'll explain once again. This is my example. I'm directly coming to the example solution. That I have the inverted rated supplies of rupees 10 lakh. Turnover of other goods 6 lakh rupees. Total turnover 16 lakh. ITC availed input 1,20,000, input service 30,000, capital goods 50,000. Total ITC is 2 lakh rupees. And the rate on the output tax supply is 5%. First, tell me whether it is inverted duty. First, give me the answer. Is it inverted duty? Answer would be yes. Why it is inverted duty? Rate on input is 18 and rate on output is 5%. So it is inverted duty. Yes. Second, how much refund would be granted in this case? I2. What is the turnover of inverted supply of the goods? It is 10 lakh rupees. Divided by total turnover, I can say total turnover is 16 lakh. Net ITC means, is it 120, is it 150 or is it 2 lakhs? We have discussed that in case of the inverted duty, we are entitled to take the refund of only input. So the net ITC means ITC of input. So it is 1,20,000. Tax payable on the inverted dated supplies of the goods. What is the value? 10 lakh. What is the tax rate? 5%. So it is 50,000. Multiplied by net ITC is 120. Divided by ITC availed on input and input service. ITC availed on input is 120. ITC availed on input service is 30. So I can say that total is 150. Let me see the answer. Turnover of the zero rated supply the goods is 10 lakh. Total turnover is 16 lakh. Net ITC means ITC of input 120 and minus 50,000 tax payable multiplied by 120 divided by 150. So in this case, the refund would be 35,000. I hope it is clear. The concept of unjust enrichment. What is the concept of unjust enrichment? See, in the refund, that refund is permitted when you have borne the incidence of the tax. Let's say I am making the supply to you. Assume any transaction which is permitted under refund. But suppose I have collected the tax from you, and then now I am applying the refund to the government, and government is also giving the refund to me. So in this example, I am receiving the tax from two party, one from customer, one from government. It means I become rich without any justifiable reason. I become rich without any justifiable reason. So they are saying if the refund amount is more than 2 lakh rupees, then you need to provide the CA certificate to prove that there is no unjust enrichment. However, in certain cases, 54.8 is covering certain transaction in which there is no requirement of proving that you are unjust enriched. No requirement of proof. Like if I'm exporting, then there is no requirement to provide the proof. Like ITC, no requirement. Section 77, no requirement. What is the relevant date? At the start of the chapter, I told you that I can take the refund within 2 years from the relevant date. Relevant date is different from case to case basis. What is the relevant date? In case of the export out of India, the refund is available in respect to the goods. If it is exported by sea, then date on which the ship or aircraft leaves India. If it is by land, then date on which the goods passes the custom frontier of India. If it is by post, then date of the dispatch. In case of the deemed export, a refund is 2 year would be counted from the relevant date. And what is the relevant date? GSTR 3B. Then there was a question which is being clarified by the CBIC that suppose in case of the deemed export, we know that supplier or recipient, anyone can go for the refund. If the recipient is going for the refund, then that's the returns will be the return of supplier or the return of the recipient. The circular has clarified that return would always be the return of supplier in which he has disclosed the supply. If you are making the supply to the SEZ unit or developer, they are saying GSTR3B. When you provided the same in the GSTR3B, then from that you need to get the refund within 2 years. If it is a service, export of the service, then I can say 2 year would be counted from payment or invoice, whichever is earlier. If it is a date judgment decree, then date of the judgment, date of the order will be the relevant date. And from the relevant date, you need to apply the refund within 2 years. If it is inverted duty structure, clause 2 inverted duty structure. So they are saying 2 year would be counted from the GSTR 3B filed by the supplier. If you have paid the taxes provisionally, then date of the adjustment of the tax after final assessment, you are entitled to take the refund. In case of the person other than supplier, it means recipient. The date of the receipt of the goods or services by that person. In any other case, date of the payment. So these are the category of the relevant date. I hope it is clear. Now let's move to the next chapter, but first take the break of 10 minutes. We will resume at 7:15. We will resume at 7:15 and we'll start the another topic. We have multiple topics, so we will start the next topic after the break of 10 minutes. Ashok ji, just a minute. Now we will discuss multiple chapters in short, one on each topic. I will spend the 10-15 minutes. GST on job work. What is the meaning of the job work? Job work means any treatment or the process by a person undertaken by a person on the goods belonging to another registered person. Underline the word another registered person. It means the treatment or the process should be on the goods which is belong to another registered person. There has to be the treatment or process, and it should be on the goods, and goods should belong to the another registered person. Then only it is job work. And if there is a job work, then the process has been given in the section 143. Read with rule 45. Point number 1. That when, let's say, I'm a principal and I'm sending the goods to my job worker. The first, when I'm sending the goods to my job worker, it can be input or it can be capital goods. If I'm sending the input to my job worker, then it should come back within a period of 1 year. Or if it is a capital goods, then it should come back within a period of 3 years. First one. Let me tell you some crux about the job work. Then we will discuss provisions. When I'm sending the goods, it should come back within a period of 1 year, and capital goods, it should come back within a period of 3 years. Next is this period of 1 year or 3 year can be further extended based by the commissioner by another period of 1 year and another period of 2 years. So it means one is originally one for input and 1 year for extension. It means totally it should come back within a period of 2 years, including extension. If it is a capital goods, original time limit is 3 years, and 2 more years can be extended by the commissioner. Total 5 years. It should come back within a period of 5 years. If it is not coming back within this period, then what will be the implication? After the expiry of this period, either goods should come back or it should be sold. If both are not happening, then it will be considered as deemed supply. Section 143 says that it will be considered as deemed supply. So it should come back within 1 year, 3 years, or 1 year and 3 years if it is a goods or capital goods. Then it says that provided that principal shall not supply the goods from the job worker unless the principal declared the place of the business. So question is, if the principal like to make the supply of the goods from the place of the job worker, then it says that it can do, provided either that job worker should be registered, or if he is not registered, then his principal place of business is being added in the principal GST number, principal GST. So the job worker ka address should be added in my GST registration as an additional place of the business, but it should be within the state only, because if it is the different district, we can't add the other state ka address as an additional place of business. Or it should be, when the principal is engaged, as may be notified by the commissioner, so they can notify certain category of the goods which can be supplied directly from the job worker place. The period of 1 year and 3 years can be extended by another period of 1 year and 2 years on the sufficient cause being shown to the commissioner. The responsibility of keeping proper books of accounts lies on the principal. Where the inputs and for the job worker are not received back, whatever the period we have discussed, then it shall be deemed that such input has been supplied by the principal to the job worker on the day when the input was sent out. It means it is not after 2 years. It will be treated as a deemed supply since beginning. It means 2 year ka interest has to be paid. Same for capital goods, but please note mold, dies, jigs, fixtures, tools, etc., which is being consumed in the process, it will not be considered as capital goods. If there is any waste or scrap generated during the process, then it can be supplied by the job worker on the payment of the taxes. Whatever the taxes is applicable, it can be supplied directly from the place of the business of the job worker. And if he is registered, then he will pay, or if not registered, then principal will pay the applicable taxes. Then rule 45 talks about that the first, when goods is being sent to the principal, it should be on the delivery challan. Then the challan which is being issued by the principal may be endorsed by the job worker, indicating the quantity and description, and the goods are sent by the one job worker to another, etc. It means I am sending the goods to my job worker, it will be on the delivery challan. Now he is sending the goods to the another job worker, or he is returning the goods to me. He can do either, he can create his own challan, or he can endorse my challan also. Then challan issued as per 55, then there is a requirement to fill the ITC 04, that there is a one compliance on the principle that he has to furnish the details in the ITC 04, whatever he has sent the goods to the job worker, or job worker has sent back the goods to me. This detail has to be reported in the ITC 04. ITC 04 is yearly if the supplier principal ka aggregate turnover is up to 5 crore. And if my turnover, principal ka turnover is more than 5 crore, then the requirement to furnish the ITC 4 will be half yearly. Then if it is not written, then it will be considered as deemed sale. I hope it is clear. So this part we have discussed about the job worker. Let me move to another topic, that assessment and audit. Very, very important. What is the assessment? What is the audit? So the GST is talking about various assessment. Section 59, section 64. Self-assessment, provisional assessment, summary assessment, scrutiny of returns, assessment of unregistered person, or fail to file the return, etc. Rule section 59, self-assessment means filing of the GSTR 3B. We are calculating our tax liability under forward charge basis. We are calculating our liability under reverse charge basis. We are calculating the ITC eligibility, not eligible ITC. Everything we are calculating at our own basis and then filing the return. It is nothing but the self-assessment. Valid return means the return in which the self-assessed tax has been paid in full. Now the next is provisional assessment. The provisional assessment, section 60 subsection 1 says that it can be only in two circumstances. Suppose I am a registered person and you are the GST officer, I can request to you that I am unable to determine two things, either rate of the taxes or the value. Suppose I am making the supply, but I am unable to determine the value, or I am unable to determine the rate, then I can go for the provisional assessment. If I'm going for the provisional assessment, then these requests would be made and the order has to be passed within a period of 90 days, but this 90 days can be further extended. I has to, so I'm basically, the order will give some sort of the taxes, that this is the rate of the taxes or this is the value. Then I have to furnish the bond or security or surety. Difference between the provisional tax and the final tax, whatever the difference is there, if I am not paying, then government can recover the differential taxes from the bond or security. Please note, the order issued for the provisional assessment, that is not the final order. That is again the provisional order. It means the government can change the rate of the taxes or value at a subsequent stage at the time of the final assessment. This is like on provisional basis. And that is the reason they are asking us to submit the bond. The amount shall include the taxes also. Then they are saying final assessment. What is the final assessment? Once the provisional assessment ka order has been passed, then within a period of 6 months from the provisional assessment order, the officer will pass the final assessment order. This 6 month time can be extended by joint commissioner or additional commissioner by another period of 6 months, and by further period of not exceeding 4 years by the commissioner. So it means 6 month time is there. It can be further extended by 6 more months by the JC or AC, and by another period of the 4 years by the commissioner. The registered person shall be liable to pay the interest on any tax payable with under the provisional assessment but not paid from the first day after the due date of the payment of the taxes till the date of actual payment. So he need to pay the interest. That is very much clear. Where the registered person is entitled to the refund on the final assessment order, he can go for the refund subject to the provision of 54.8 unjust enrichment, 54.3 that we have discussed. The final assessment order issued under subsection 3. Then the scrutiny of return. This is very popular assessment and might be you have also observed or you have also seen during your practical articleship. ASMT 10. You might have heard the word or might be seen the notice under ASMT 10. What is the ASMT 10? ASMT 10 is nothing but the assessment under section 61. Proper officer may scrutinize the returns and related particular applicable by the taxpayer, furnished by the taxpayer, by the registered person. So I have furnished the GSTR1, I have furnished the GSTR3B, I have furnished the e-invoicing or e-way bill, whatever the details I have furnished, from that detail they will scrutinize and they will ask in case of any discrepancy in the ASMT 10. I will give the reply in the ASMT 11, and finally, either my reply is not satisfactory or I have not given the reply. Then they will take any action. Either they will initiate the audit, they will initiate the inspection, search seizure, they will determine the tax under section 73, or they will determine the tax interest penalty under section 74. These are the actions that can be initiated by the officer. Let me repeat once again. Scrutiny of return. You are the officer. You are issuing the ASMT 10 to the registered person. Registered person will give the reply in the ASMT 11. And either you are satisfying, pay the taxes. Either you are satisfying, matter closed, ASMT 12. If you are not satisfying, then you can do the inspection search seizure, section 65, 66, 67, audit, then determine the tax interest penalty under 73 or 74. Next is assessment of non-filer of the returns. It means the defaulter of the return. The taxpayer is not filing the return at all. So they are saying under section 39 means GSTR 3B or section 45 means final return GSTR 10. And they will issue the notice under section 46 in the GSTR 3A. The officer may proceed to assess the liability on the best of his judgment, taking into account all the relevant material which is available, and pass the assessment order within 5 years from the date specified in section 44 for furnishing the annual return for the financial year to which tax not paid, etc. Where the registered person furnishes the valid return within 60 days, the service of the assessment order shall be deemed to have been withdrawn. So the notice has been issued, the order has been issued under section 62. After that order, if the GSTR 3B or any return which is being furnished within 60 days, the order will be deemed to be withdrawn. And this period of the 60 days is further 60 more days is available, but subject to the payment of additional fee. It is not the late fees. It is additional late fees of 100 rupees for the each day of the delay beyond 60 days. So it means 60 initial days, 60 more days, total 120 days is available. Section 62 is giving the time limit of 120 days if you file the valid return if the registered person to whom the order has been issued under section 62, he filed the valid return, the order will be deemed to be withdrawn. SOP, they have issued the SOP also, Circular 129, system generated notice will be given 3 days in advance. The return will be furnished, then okay. If the return is not being furnished, then after 5 days, they will again issue the reminder ticket. Then again, if the not filed, then they will issue the notice in 3A. Again, they will wait for 15 days. If the return is being filed, no problem. Everything is okay. If the return is not filed, then they will issue the assessment order. While issuing the order, they will consider the details furnished in the R1, 2A, 2B, e-way bill, other sources, etc. Again, the valid return is filed, then order, it shall be deemed to be withdrawn. If the said return has remained unfurnished, then the proper officer may initiate the proceeding under section 78 and initiate the recovery under section 79. Also, parallelly, they will initiate the cancellation of the GST registration under section 29, subsection 2. Then is assessment of unregistered person. So either the person is liable to be registered but not registered, not taken the registration, or is registered earlier but he has cancelled, but he was liable to pay the tax. In these two cases, the assessment under section 63 can be initiated. Office has to give the order within 5 years from the due date of the date of furnishing of annual return. And again, opportunity of the being heard will always be given. This is the principle of natural justice, fundamental right, that always whenever the adverse order is being issued, the officer has to give the opportunity of the being heard always. Last is summary assessment. Summary assessment is nothing but the fast track assessment. What is the fast track assessment? If the officer feel that there is unnecessary delay, the delay in the doing the assessment will increase, will hamper or will increase the loss of revenue. So normally we can say the time limit is 5 years for the assessment. But if the officer feel after taking the permission from the joint commissioner or additional commissioner, he can initiate the assessment on the fast track basis to protect the revenue's interest. But if the taxpayer feel that they have issued wrongly or they have taken without any logical reason, they have taken, so he can also request to the commissioner for not doing the assessment in the fast track mode. Correct. So then if the additional commissioner or the joint commissioner consider that order is erroneous, then he can withdraw that order, whatever it is being given. Now, the audit. In the GST, earlier there were the 3 types of the audit. One audit by chartered accountant, section 35, subsection 5, that has been withdrawn. Now there is 2 audit. One audit, both audit are by the department only. 65 audit done by the department by their officer only. You have seen also, right? Like they are issuing the ADT1, ADT2. These are all the part of 65. Next audit is 66, special audit, in which the department will impanel the chartered accountant or the cost accountant, and then audit will be done by the chartered accountant or the cost accountant in practice. The 65 audit by the tax authority, the commissioner or any officer authorized by him by way of the general or special order may undertake the audit of any registered person at such frequency, such manner as may be prescribed. It can be part of the year, it can be multiple years also, it is possible. Normally for a financial year or multiple or combination of multiple financial year is being taken by the audit officer. They can conduct the audit at the principal place of the business or additional or any place of the business of the taxpayer, or they can ask the document to be submitted at the department, and they can do the audit at the department also. They have to be, the officer has to give at least 15 working days by the notice of not less than 15 working days. Audit has to be completed normally within 3 months, or additionally, they can take the period of not exceeding 6 months. So 3 plus 6. This is the time limit of the audit. Commencement of the audit. See, point to be noted. The one big problem, the audit has to be completed within a period of 3 months. No problem. But from which date? Date of the commencement of audit. And what is the date of the commencement of audit? That is important. The commencement of audit means all the document has been submitted by the registered person. So, for example, if any officer is asking the document on a recurring basis, till the time you will not submit all the document, the audit is not being commenced. Then from the commencement of the audit, the 3 months would be counted or plus additional 6 months. The expression commencement of audit shall means the date on which the record and the other document called by the tax authority are made available. During the course of the audit, the authorized officer may require the registered person necessary facility to verify the books of accounts or to furnish such information as may be required. On conclusion of the audit, the officer within 30 days inform the registered person whose records are audited about the finding his right, obligation, etc. Where the audit conducted result in the detection of the tax interest penalty under 73-74, then he can take the action accordingly. '66 special audit. If at stage of the scrutiny, 61 we have discussed, inquiry, investigation that we will discuss in 67, next topic, or any other proceeding before him. Officer not below the rank of the assistant commissioner, having regard to the nature and the complexity of the case and interest of the revenue, means government ka interest, government ka benefit, government ka revenue loss. It is of the opinion that value has not been correctly declared or the credit is not within the normal limit. He may, with the prior approval of the commissioner, direct that registered person to get his record audited by a chartered accountant or cost accountant, which is nominated by the commissioner. So there will be the impanelment. So they will nominate certain chartered accountant or cost accountant, and registered person has to get account audited from that chartered accountant or cost accountant as per section 66. The time limit will be again same, 90 days. That can be again further period of 90 days, it can be extended. The provision of subsection 1 shall have the effect notwithstanding that the account of the registered person have been audited under any other provision of this act or any other law for the timing uniform. This is notwithstanding provisions, correct? Opportunity to the being will be given. Expense will be borne by the commissioner, determined and paid by the commissioner. And the special audit result into again same. So tax will be tax interest penalty will be determined either under section 73 or section 74. Next topic is inspection, search, seizure, and arrest. So, inspection 67, where the proper officer has reason to believe, not below the rank of the joint commissioner, that taxable person has suppressed any transaction relating to the supply or the stock and claim the ITC in excess of his entitlement or contravene any of the provision of this act or the rules to evade the tax. Meaning thereby, section 67 inspection, where the proper officer has reason to believe, not below the rank of the joint commissioner, that the taxable person has suppressed any transaction relating to supply or stock or claimed ITC in excess of his entitlement or contravene any of the provision to evade the tax under this act, then person engaged in the business of transporting the goods or owner or operator of the warehouse or keeping the goods which has been escape the payment of the taxes, then he may authorize in writing to the other officer to inspect any place of the business of the taxable person or the person engaged in the business of transporting the goods or the owner or operator of the warehouse or godown or any other place. Meaning thereby, officer not below the rank of the joint commissioner, if it appears that taxable person has suppressed the transaction relating to supply or stock or claim excess ITC or contravene the provision to evade the tax. First important point, evasion has to be there. Reason to believe. Then second point, if any person who is doing the business of transportation, owner or operator of the warehouse, then he can check his account or the goods in such manner is likely to cause evasion of tax payable. He may authorize in writing or any other officer to inspect any place of the business taxable person or person engaged in the business of the transportation or owner of the operator or any other warehouse of the godown or any other place. Where the officer not below the rank of the JC, either pursuant to the inspection or otherwise. Otherwise means it can be based on the intelligence information. Now they feel that based on the inspection or otherwise, if they feel the goods liable to be confiscated or any document or books or things which is in the which is in of the opinion shall be useful are secreted in any place, and they can issue the INS 02 to search and seize the goods, document, books, or things. And sometimes it is not practicable to seize. Might be the goods are too much, or the machine are very large, and it is not possible to move that particular goods. Then they can issue the INS 3. They can issue the direction that registered person will not move these goods without obtaining the permission from the officer. He will not deal the goods without the prior permission. Document or books or things so seized shall be retained only for the purpose of their examinations. They can keep the books, goods, things, whatever the period they want. But if the things are not relied upon document, then they have to return. Document, books, or things which have not been relied upon shall be returned not within 30 days. Please note which they are talking about not being relied upon. If the officer want that it is being relied upon, then they want for an unlimited time period possible. Sometime in the practically, they are using this particular 67 subsection 2 in a very, very rigid manner. It means they are not returning the goods, books, things, etc. for a longer period. It is possible then sometime the High Court has given the direction we have observed in some cases. Again, the officer has the power to seal or break open the door. Again, the registered person is entitled to take the copy. Suppose officer is doing the search seizure and taking the certain document. Then registered person can make the request that please provide the copies. Please allow me to take the copies. But this is the discretionary power. If the officer like to deny because he feel that it might be misused, then he can deny also because it is the discretionary power given at the discretion of the officer. He may allow or he may not allow. Then again, yes, whatever the goods has been seized, it can be released on the provisional basis upon bond or security in such manner as may be prescribed. And where the goods are seized and no notice, confiscation under section 130 has been given, then it has to be returned. Whatever the goods has been seized, it has to be returned within 6 months. What is the difference between confiscation and detention? Detention means only physical possession has been given to the or has been with the department. But confiscation means the ownership has also been shifted to the government. It is vested with the government. Again, the government, having regard to the perishable in the nature, depreciated, no sufficient space, and other relevant consideration. By notification, they can issue the notification and list the category of the goods which can be disposed of. So they have issued one notification, and like the perishable goods are being given in the notification, and that goods can be disposed of even for a shorter period. When any goods has been seized by the officer, then he has to prepare the inventory. The provision of the code of the criminal procedure will be applicable to search and seizure, and word magistrate, which is written in the CRPC, will be commissioner will be treated equal to the magistrate for the purpose of the search and seizure. Again, they can retain the same for the so long as may be necessary in connection with the proceeding that we have already discussed. So, sometime prior to the search seizure, the officer is doing the inspection, investigation. So they are purchasing certain goods from that registered person to ensure whether he's issuing the tax invoice or is engaged in the malafide practice, bogus invoices, etc. In order to check whatever the goods is being purchased by him, it can be returned after all the process, and the value and the amount has to be returned. Correct. Power to arrest. What is the power to arrest? Power to arrest means commissioner has reason to believe commissioner has reason to believe that a person has committed any offense specified in the clause A, clause B, clause C, and the clause D of section 132, subsection 1. We will discuss the 132 in some time. But 132 talks about certain offenses in which the first four offenses are serious in the nature, out of which they are saying if any commissioner has reason to believe that any person has committed any offense which is being listed in 132.1, clause A, clause B, clause C, clause D, and which is punishable with clause 1 and clause 2. So now there is two combination. Try to understand when the arrest will attract four offenses of 132.1, invoice issues without the movement of the goods, or only goods has been moved without the invoice. On the fake invoice, ITC has been taken, or tax not paid, short paid erroneously. The tax has not been paid within 3 months. These type of the four offenses are being conducted, and the amount involved is greater than 2 crore. Clause 1 is talking about amount involved is greater than 5 crore, and clause 2 is talking about amount between 2 to 5 crore. So it means the two combination. Offense are four offenses and amount is more than 2 crore. Then section 69 would be attracted. Power to arrest. And whatever the ground of arrest is there, he has to be informed, and within 24 it has to be produced before the magistrate. CRPC ka provision would be applicable. Power to summon, to give the evidence and produce the document. So section 70 talking about that officer can issue the summon whose attendance they consider necessary either to give the evidence or produce the document. So every such inquiry shall be deemed to be the judicial proceeding. There are multiple clarification. Instruction has been issued so that misuse of the summons should not be there in the market. Next is access to the business premises. Any officer under this act, authorized by the proper officer not below the rank of the GST, shall have the access to any place of the business of a registered person to inspect the books of accounts, document, computer program, software, etc., which may be available at such place for the purpose of carrying out any audit, scrutiny, verification as may be necessary to safeguard the interest of the revenue. Section 71 giving the power to access the business premises. Every person in charge of that place referred to in subsection 1 on demand make available to the officer or the audit party 6566, correct, by the proper officer or the cost accountant or the chartered accountant, and every person who is in charge of the respective place who has been accessed by the officer, then they have to provide the record as prepared and maintained by the registered person, trial balance, annual financial accounts, cost audit report, income tax audit report, relevant record for the scrutiny by the officer or audit party within a period of not exceeding 15 working days from the day when such demand is made, or such further period as may be allowed by the officer or the audit party. Officer to assist the proper officer. So they are saying that police officer, railway officer, custom, other officer engaged in the collection of the land revenue, including village officer, state tax officer, UTGST officer, will assist the CGST officer in implementation of GST Act. Government by notification empower and require any other class of the officer to assist the proper officer in implementation of the act called upon to do by the commissioner. Next topic is demand and recovery. So determine, so this is very important. 73 and 74. Try to understand 73 and 74 are these are the two main section of determining the tax, interest, and penalty. Out of the five circumstances, what are the five circumstances? Tax not paid, short paid, erroneously refunded, ITC wrongly availed, or ITC wrongly utilized. Please note the word or is there. ITC wrongly availed or utilized. Please note one thing in the section 50, in the interest, calculation of interest, we have read that ITC availed and utilized. So out of these five, if there is any non-compliances or any short tax paid, etc., in that case, the determination of the tax, interest, penalty will be done by the 73, will be done by the officer under section 73 if it is non-fraud case. And if it is a fraud case, then the determination will be done under the 74. Again, let me repeat the out of the five circumstances. If the officer, if it appeared to the proper officer that tax not paid, short paid, erroneously refunded, wrongly ITC availed or utilized because of this point, other than the reason of the fraud, willful misstatement, or suppression of the fact, then the officer will issue the notice. So they will issue the notice why the taxes should not paid or interest along with interest and penalty. Then they are saying proper officer time limit of issue the notice. So this is time limit to issue the order, and this is the time limit to issue the notice. What is the time limit to issue the order? This is 3 years. 3 years from the due date of furnishing of annual return. And what is the time limit to issue the notice? Minus 3 months. It means notice has to be issued within 2 years, 9 months. At least 3 months. It can be more than that, no problem. It can be more than 3 months, no problem, but at least 3 month gap has to be there. Officer shall issue the notice under subsection 1 at least 3 months in advance from the last day to issue the order. What is the last day to issue the order? It is 3 years. When you read the provision of section 74, almost same. It is fraud case, right? So you will find that last date to issue the order is 5 years and last date to issue the notice is minus 6 months. Last date to issue the order is 5 years and last date to issue the notice is minus 6 months. So in other words, I can say that if it is 73 case, then what is the time limit to issue the notice? I can say 2 years, 9 months. What is the last date to issue the order? 3 years. If it is a 74 case, then what is the last date to issue the notice? 4 years, 6 months. What is the last date to issue the order? 5 years. I hope it is clear. Now, there is a slab-wise rate of the penalty. They are saying if the person before service of the so-called notice pay the amount of the tax along with interest, on the basis of his own ascertainment of the tax or the tax as determined by the proper officer and inform the proper officer in writing. So that is DRC 03 and no penalty. If he pay the tax along with interest before issuance of the so-called notice. The proper officer, after considering the representation and penalty equal to 10% of the tax, whichever is higher, or 10,000, whichever is higher, then issue the order. It means before so-called notice, no penalty. After so-called notice, within 30 days, no penalty. After 30 days, then the penalty would be there, but that would be again 10% or 10,000, whichever is higher. Notwithstanding anything contained in subsection 6 or subsection 8, penalty under subsection 9 shall be payable where any amount has not been paid within a period of 30 days from the due date of the payment of the taxes. It means if the payment is not made within 30 days, then penalty would always be there. 74 exactly same. The only difference is last date to issue the order is 5 years and last date to issue the notice is 6 months in advance. Correct. And the penalty percentage before so-called notice, the penalty percentage would be 15. After SCN, within 30 days, penalty percentage would be 25. After the order, penalty percentage would be 50 within 30 days. And after 30 days from the order, penalty would be 100%. Now, the 74 is talking about where, so, or see, if for the purpose of 73 and 74, all proceeding in the notice shall not include the proceeding under section 132. So suppose we have discussed that whenever he pay the tax, interest along with penalty, etc., then it will be deemed all proceeding deemed to be concluded. But in all proceeding, they are saying the 132 means offenses will not be included. So a registered person or a person can still be liable for 132 even after determination of the tax interest penalty. Again, one important part. If the 73-74 has been deemed to be concluded, if the tax interest, whatever the penalty, again the main person have been concluded in 73-74, then the proceeding against all the person liable to pay the penalty 122 and 125 are deemed to be concluded. It means if main person who is being determined 73-74 and paid the taxes, etc., then the proceeding for any other person under the section 122 and 125 will be deemed to be concluded. So they have explained the word suppression. What is the meaning of suppression? Suppression means non-declaration. Fact and information in the written statement, report, or any other document furnished or failed to furnish any information being asked in writing by the proper officer. General provision. So 75 talks about general provision where any appellate authority or appellate tribunal or court conclude that notice issued under 74 is not sustainable. So now try to understand. Officer officer issued the order under section 74 that has been challenged, and appellate authority, court, tribunal, etc. They are saying that order under section 74 is not sustainable. Why not sustainable? Because of the non-element of the fraud. There is no presence of the fraud, willful statement, suppression of the fact, etc. It means if the appellate authority tribunal are saying that notice is not sustainable, notice that charge of the fraud, misstatement, etc. established against the person whom notice was issued, then a proper officer shall determine the tax payable, deeming that notice were issued in the 70. Very, very important term. So it means the officer which issued the notice in the 74, it will be deemed to be issued under 73. But problem is, suppose the notice has been issued under section 74 after the time limit of 73. Then, and that notice was non-sustainable. Appellate authority tribunal saying that notice is not sustainable under 74. And the doubt was, will it be sustainable under 73? Because as per the 75, it is saying it will be deemed that it has been issued under section 73. Doubt was whether it is possible that even the issued notice has been issued after 73 time limit. The same has been clarified by the circular that if the notice is being issued after the time limit of 73, and ultimately the authority has concluded that 74 is not sustainable, then the notice will not be sustainable in the 73 also, because the notice has been issued after 2 year 9 months. That is one important aspect. Then the 2 year from the date of the, so whatever they have, where any order is required to be issued in the direction of the appellate authority, tribunal or court, such order shall be issued within 2 years. So that has to be completed within 2 years. Then they are saying where appellate authority or tribunal or court modify the amount, then interest and penalty shall stand modified accordingly. Interest shall be payable even if it is not specified in the order. Sometimes the order is not giving the amount of the interest, then also it is payable. Adjudication proceeding shall be deemed to be concluded if the order is not issued within the time limit that I have discussed. Then they are saying if the order is being stayed, then the period of the stay will not be counted in the calculation of the time limit of 7310 or 7410, 3 year or 5 year. Second point, if the appellate authority tribunal high court has given the decision which is prejudicial to the interest and appeal has been made, then whatever the time that has been taken between the decision and the appeal, whatever the time has been taken, that will be excluded from computing the period referred to in 7310, 3 year or 7410, 5 year. The period spent between the date of the decision of the appellate authority or tribunal or the decision and that of the high court, or the date of the decision of high court or date of the Supreme Court. So the date of the decision by the lower authority and date of the decision by the higher authority, whatever the time has been taken, that time will be excluded in calculation of the time limit of 7310, or that is 3 year, or 7410, that is 5 year. Notwithstanding anything contained in 73, 74, very, very, very important. They are saying where any self-assessed tax in accordance with the return furnished under section 39 remain unpaid. Please note, it is using the word notwithstanding anything contained. It means even after the expiry of 3 year or 5 year, if something is the self-assessed tax, it can be recovered under section 79. There is no time bar, or there is no time limit on self-assessed tax. What is the meaning of self-assessed tax? They are saying self-assessed tax shall include the tax which is payable as per GSTR 1 but not reported in the GSTR 3B. I can say the difference between 1 3B, the difference between 1 3B would be self-assessed tax and can be recovered even after that time limit of 73-74. Now, double jeopardy, there is a concept of double jeopardy. If one is being penalized in the 73-74, then the penalty under this act cannot be imposed because of any other provision. Let's say officer imposed the penalty in the 73 for the same offense, he cannot be penalized under any other section. So let's take a break of again 10 minutes and then we will resume to the 76, section 76 tax collected but not paid to the government. So allow me 10 minutes. So sir, अशोक जी एक बार ब्रेक स्टार्ट कर दीजिए 10 मिनट का. to the government. Then they are saying the proper officer shall, after considering the representation made to the person on whom the notice is being issued, amount due from such person shall pay the amount as determined. In addition to pay the amount, he has to pay the interest also. The proper officer shall issue the order within a period of 1 year from the date of issue of the notice. Then where the issuance of the order is stay by the court, then period of the such stay shall be excluded from calculating the 1 year. Then 77 tax wrongly paid. So now this provision is also linked to the refund chapter. So at that point of time, so how it is linked to the refund chapter, try to understand. So let's say I have given the supply to you, and according to me, it is interstate supply and I have paid the IGST. But subsequently, it was held that the supply was intra. So I have paid the IGST. 77 is saying, read with section 19 of IGST, it says that pay the correct tax, that is C plus S, and take the refund of the wrong tax, that is I. Rule 89 sub rule 1A, which talks about that I can take the refund of the wrong taxes paid within 2 years from the date when I am paying the correct taxage. That is the relevant date. Sorry. One second. So then initiation of the recovery proceeding. Section 78 says that within a period of 3 months from the service date of the service, the search order shall be initiated. Why 3 months has been given? Because the 3 months is the time limit of appeal. If the proper officer consider that it is expedient in the interest of the revenue, then they can recover such amount within a period less than 3 months as may be specified. Recovery of the taxes. So whatever the taxes that is being to be recovered, then he can recover by any of the method. So he may deduct or may require any other officer to deduct so amount which is payable from any money owing to such person. So for example, I am the proper officer and I need to issue the order to the registered person, and there is any money payable, so I can adjust that money recovery. Or if there is any goods which is belonging to that person, it can be sold by detaining and selling that goods. By sale of the goods, yes, amount can be recovered. Then proper officer may, by notice in writing, require any other person from whom money is due. Let's say the Mr. A, against the recovery proceeding has been initiated by the officer. He has the property which is given to the tenant, any person. So the officer can issue the notice to that tenant to give the rental amount instead to the landlord. Please give that directly to the government. Then the tenant has to comply that notice, and where the notice is being issued by the post office, issued to the post office, banking, insurance, they shall not be necessary to produce the passbook, deposit receipt, etc. for any that notice. Then if they fail to make the payment in pursuance to thereof to the government, he shall be deemed to be the defaulter. Then now the tenant will be considered as a defaulter. So the officer issuing the notice under subclause 1 at any point of time amend, revoke such notice or extend the time for making the payment. They are saying person making the payment in compliance with the notice issued shall be deemed to have been made under the authority of the person in default, and such payment shall be credited to the government, shall be deemed to constitute the good. So now the tenant, if he has deposited the amount to the government, then it will be considered that Mr. A has deposited the amount. If any person discharging the liability to the person in default after servicing on the notice issued under subclause 1 shall be personally liable to the government. Okay, where a person to whom the notice is issued prove up to the satisfaction of the officer that the money demanded was actually not due to the person. If the tenant says there is no money due to the Mr. A, so in that case, the officer may stop that notice, etc. At the time of the notice was served, no money was demanded, so likely to become due to that person, or any amount that shall be deemed to be required, the person on whom the notice has been served to pay to the government, or any money or any part thereof. Then section 79 further it talks about that the officer may distrain any movable or immovable property and detain the same until the amount payable is paid. And whatever the cost of that distress, keeping the property remain unpaid for a period of 30 days, he can recover by selling off or disposing of that asset. And if any surplus is there, it can be given to that person. Then proper officer may prepare the certificate, and the certificate can be given to the collector. Now the collector will proceed as if it was the revenue, it was the arrear of the land revenue. Then, notwithstanding anything contained in the Code of Criminal Procedures, the proper officer may file an application to the appropriate magistrate, and such magistrate shall proceed to recover the amount as if it is a fine imposed. Then let me talk about liability to pay in certain cases. Section 85 talks about liability in case of the transfer of the business. So in case that transfer the business, the whole or part, by sale, gift, lease, leave and license, hire or any other manner, the taxable person and the person to whom the business is transferred shall jointly and severally liable wholly or to the extent of the transfer to pay the tax interest penalty due from the taxable person upon the time of the such transfer, whether such tax interest penalty has been determined before such transfer but has been remained unpaid. Okay. Where the transfer either on his own name or some other name, he shall be liable to pay. Where the transfer is to the business referred in subsection 1 carries on such business either in his own name or in some other name, he shall be liable to pay the tax on the supply of the goods or services or both effected by him and effect of the date with effect from the date of the transfer, and shall, if he is registered under this act, apply within the prescribed time for the amendment for his certificate of registration. Further, liability of the agent, where an agent supply or receive any taxable goods on behalf of the principal, such agent and the principal jointly and severally liable. Liability in case of the amalgamation or merger of the company, when two or more company are amalgamated, merged pursuant to the order of the court, then and the order is to take effect from the date earlier to the date of the order of any two or more such company have supplied, received goods or services or both from each other during the period commencing on the date from which order take effect till the date of the order, then such transaction shall be included in the turnover of the supply or receipt of the respective company, and they shall be liable to pay the tax accordingly. अगर कोई ऑर्डर इश्यू होने के पहले उसका इफेक्टिव डेट पीछे का है, तो उस पीरियड के लिए द कंपनी वुड बी लायबल. Notwithstanding anything contained in the said order, for the purpose of this act, the said two or more companies shall be treated as distinct company. Liability of the director of a private company, notwithstanding anything contained in the Companies Act, where tax interest penalty due from the private company and respect of any supply of the goods or services cannot be recovered. Every person who was the director during such period shall, no, sorry, let me repeat. Notwithstanding anything contained in the Companies Act, where any tax interest penalty due from the company but cannot be recovered, and every person who was the director during such period will be liable. Unless he prove that this non-recovery cannot be attributable to the negligence of the director. If he prove, then again not payable, otherwise he has to pay. Where the private company is converted into the public company, and any tax interest penalty in respect of any supply during the company was a private company cannot be recovered before such conversion. So if any amount which is to be payable by the private company but cannot be recovered, then it will be applied to any person who was the director of the private company, he has to pay. Nothing content shall apply to the personal penalty imposed on such director. liability of the partner, notwithstanding anything contrary in any other law for the timing in force, where any firm is liable to pay the tax interest penalty, the firm and each of the partners shall jointly and severally be liable for such payment, provided that where any partner retire from the firms shall intimate the date of the retirement of the said partner to the commissioner by a notice in that behalf in writing, and such partner shall be liable to pay the tax interest penalty. Provided further, if no such intimation within 1 month from the date of the retirement, the liability of the such partner shall continue until the date of the intimation. This is very harsh provision. If any partner who is retired but not being intimated, then there is a problem. Liability in other cases, where the change has occurred in the constitution of the firm and association, the partner of the firm or member of the association as it exists before and as it exists after reconstitution shall jointly and severally liable to pay the tax interest penalty. The provision of subsection 1 so far apply where the taxable person being the firm association is dissolved, where the taxable person being HUF has affected partition with effect to the business carried on by it, and accordingly reference in that subsection to the discontinuation shall be construed. LLP under the provision of the limited liability partnership shall also be considered as firm, and court include district court, high court, and supreme court. Then offenses and penalty. Section 122. 122 is having that 21 different type of the offenses, out of which 3 offenses has been omitted. The penalty amount is 10,000 or tax whichever is higher. What are the offenses? Supplies any goods or services without the invoice, issue invoice without the supply of the goods, collect but fail to pay the tax beyond a period of 3 months, and collect the tax in contravention but fail to pay to the government. Then what are the other? Fail to deduct the tax, fail to collect the tax, TCS and TDS, take or utilize the ITC without actual receipt of the goods or services, fraudulently obtain the refund, take or distribute the ITC in contravention of section 20, falsify the financial record, liable to be registered but fail to obtain the registration, furnish any false information with regard to the registration in particular, obstruct or prevent the officer in discharging the duty, transport the taxable goods, suppress the turnover, fail or keep the maintain or retain the books of accounts, fail to furnish the document which is called by the officer, supply or transport or restore the goods which is liable to be confiscated, or issue the invoice by using the registration number of other, GSTN number of other, or temper and material evidence disposed of temper with the goods that have been detailed, seized or attached. In all such cases, the penalty will be 10,000 or 100% of the tax, whichever is higher. Liable to pay the penalty of 10,000 or an amount equal to tax evaded or tax not deducted or tax short collected but or not paid to the government, or fraudulently refund claim, whichever is higher. So 10,000 or tax, whichever is higher, that is the penalty amount. 122(1)(a) was inserted to cover or to impose the penalty on the mastermind. Therefore, the section 122(1)(a) was started with the word any person. It means this penalty can be imposed even to unregistered person who retain the benefit of the transaction covered under some clauses which you can refer, and at whose instances this transaction is conducted. They are saying the mastermind who is conducting the transaction plus who retaining the benefit, at whose instances the transaction is conducted and is retaining that benefit, then he can be liable to the penalty of the tax evaded or ITC availed or passed on. The penalty on e-commerce operator. Now we know that any person can make the supply through ECO without taking the GST number. Second, composition dealer are being allowed to supply the goods through ECU, meaning thereby now this is the responsibility of the ECO. This is the responsibility of the ECO that he has to ensure that any unregistered person has not crossed the threshold limit. Any composition dealer are not making the supply out of that state. If they are failed to do the same, then such ECO would be liable to the penalty equal to the amount of the tax involved. (122)(2), they are saying it is exactly like 73-74. It is exactly equal to the like 73-74. They are saying any registered person, 5 problem. Tax not paid, short paid, erroneously refunded, or ITC wrongly availed, or ITC wrongly utilized. Because of the 5 problem, if the reason are non-fraud case, then the penalty will be 10,000 or 10%. And if it is a fraud case, then the penalty would be 10,000 or 100%. 122 subsection 3 say that the person who are adds or abate the offenses, means who are supporting that conduct the offense. In that case, penalty can be subtracted up to 50,000 rupees. See, one thing to be noted, whatever the penalty we are reading, that is of the CGST Act. Whatever the penalty that we are reading, that is of the CGST Act. So equal amount of the SGST would be there. So it means if we are reading the provision, if we are reading the amount of the 25,000, it means 25 under CGST, 25 under SGST. So the total penalty would be 50,000. Acquire the possession, receive or deal with the supply of the goods which he reason to believe that contravention of the provision, fail to appear before the for a summon, or fail to issue the invoice, etc. Penalty under 122 that we have discussed. 124, fine to failure the, so certain statistics to be furnished if without reason. So if any person who is required to furnish the information or written under section 151 without reasonable cause, fail to furnish such information or willfully furnish or cause to furnish any information, then the penalty would be 10,000 plus, if it is a continuous offense, then it will be, if it is a continuous offense, then it will be 100 rupees per day subject to the maximum of 25,000. It means 50,000. General penalty. Now, this is very important because multiple time it has been observed. Multiple time it has been observed that if the officer are imposing the penalty under section 125. Why? Because it says that any person who contravene any provision for which no separate penalty is provided, 50,000 ka penalty can be levied under section 125. So this is slightly rigid provision, very harsh provision, I can say. Now, but always remember that there is a one section, that is section 126, which talks about if the penalty is not being expressed with the exact amount or exact percentage, means the penalty is having the word up to, discretionary, then before imposing the penalty, this general discipline to be carried into the mind by the officer, to be kept into the mind. What are those general discipline? If there is a minor breach or there is procedural non-compliance. What is the minor breach? The minor breach means if the tax involved is less than 5,000. If the breach is the minor and omission or mistake shall be considered easily rectifiable if the same is apparent on the face of the record. And in that case, no penalty can be imposed. Then 127, power to impose the penalty in certain cases. So they have given the power, if it is not being covered in the section, then he may issue the order leaving the penalty. 128, power to waive the penalty. So it is giving the power to the government by notification, they can waive the penalty. What is the penalty in case of section 129, 130? What is the 129, 130 in case of the detention, search, seizure during the movement of the goods? No. Let me repeat once again. Section 129 will be applicable or will be levied when the person who is moving the goods, transporting the goods, and in between, officer detained the goods and checked and found that there is no proper document, e-way bill is not there, invoice is not there, bill of supply is not there. So he can impose the penalty of 129. Penalty of 129 is being divided in two parts. The officer comes forward to make the penalty. If the officer comes forward for payment of the penalty, and if the officer does not come forward, if the officer come forward or if the officer does not come forward, in that case, not sorry, officer, owner of the goods. If the owner of the goods come forward to make the payment of the penalty to the officer, in that case, the penalty will be goods are taxable then 200% of the tax. If the goods are exempted, then 2% of the value or 25,000, whichever is lower. If the owner does not come forward, then the penalty would be 50% of the value minus tax. Sorry, 50% of the value or 200% of the tax, whichever is higher. If the owner come forward to make the payment of the penalty, goods are taxable, 200% of the tax is the penalty. If the owner does not come forward, then 50% of the value or 200% of the tax, whichever is higher. Then if the goods are exempted, then 2% or 25,000, whichever is lower. Owner does not come forward, then 5% of the value or 25,000, whichever is lower. Then the notice will be issued within 7 days from the MOB 6, and the order will be issued within 7 days from the date of the notice. Once the order will be issued in the prescribed forms, then if the owner failed to pay the amount of the penalty within 15 days from the date of the receipt of the order passed that we have discussed, if the penalty is not being paid within 15 days, then the goods can be liable, can be sold or disposed of. They are saying they are also covering the conveyance in transit. It means if the conveyance in transit is also being detained, then that can be released upon payment of the penalty or 1 lakh. Please note it is whichever is lower. So I can say maximum to maximum, the conveyance can be released on payment of rupees 1 lakh. If the goods are perishable or hazardous in the nature, then the period of the 15 days can be reduced. Confiscation. So it appears that goods has been supplied in contravention of the provision of the Act or the rules made thereunder with the intention to evade the payment of taxes. Does not account for the goods which is liable to be, which is or on which he is liable to pay the tax. Supply the goods which liable to tax without having applied for registration, or contravene any of the provision of the rules made thereunder with an intention to evade the payment of the tax. Use any conveyance as mean of the transport without, and unless the owner prove that it was used without his knowledge, then all such goods and conveyance will be liable to the penalty under section 120. We have already discussed 122. So whenever the goods, confiscation of the goods is authorized, so that there is a concept of redemption fine. What is the redemption fine? So once the goods are confiscated by the department, then when they are selling those goods or conveyance, then they will give the first opportunity to buy the goods or conveyance to the previous owner only. First, they will give the opportunity to the same person. It is the amount that has to be paid, that is called as redemption fine. So it should not exceed the market value minus taxes, plus should not be lesser than. So this is upper cap and this is lower cap. The redemption fine should not be more than market value minus tax and should not be less than the penalty equal to 100% of the tax payable. provided where any conveyance is used for the carriage of the goods for hire, owner of the conveyance shall be given an option that he can also purchase that particular conveyance after making the payment of redemption fine. Again, it will always opportunity will be given of being heard. Conveyance confiscated means title will be vested with the government, and then the proper officer may, after satisfying himself, the confiscated goods or the conveyance are not required in any other proceeding, and after giving the reasonable time not exceeding 3 months to pay the fine, dispose the goods or the conveyance. What are the offenses? We have discussed section 132. Section 132, which talks about punishment of certain offenses. It is being divided 4 plus 5. 4 are serious in the nature. 5 are less serious in the nature. And if you remember, we have talked about power to arrest section 69 is also linked with these 4 offenses. What are the 4 offenses? Tax, supplied the goods without invoice, only invoice without the supply the goods. This is fake invoice, and ITC has been taken on the basis of that fake invoice and collect the tax but fail to pay to the government within 3 months from the due date. Now the next 5 offenses, they are saying that evade the taxes or fraudulently obtain the refund, falsify the financial record, acquire the possession, deal with the goods which is liable to be confiscated, receive in deal with the supply of the service which is in contravention, attempt to commit or abate the commissioning. Then these are the total 9 offenses under section 132 and shall be punishable. Now, if it is a first time offense, then the penalty will be covered by 132(1). If it is a repeat offense, then penalty will be covered under section 132. 132(1) is being divided according to the amount quantum. If it is more than 5 crore, if it is more than 2 crore. And repeat offense, irrespective of any amount. Let's read what is the quantum of the penalty. If the amount of the tax evaded, amount of the ITC wrongly availed, utilized is exceed 5 crore, then the imprisonment will be 5 years and fine. Who will decide the fine? Fine will be decided by the magistrate. Similarly, if the amount is exceeding 200 crore, 200 lakhs, 2 crore, then the imprisonment would be 3 years and fine. Then third is, they are saying the amount of the offenses, tax or ITC or refund is more than 1 crore. Earlier, this clause was applicable in all offenses. Point to be noted. Now that clause is being restricted to the clause B only. It means fake invoicing. Other clauses like only goods has been supplied, no invoice, ITC has been taken, tax not collected, short paid, that is not being covered. Only it is being covered clause B. Means if someone is involved in the fake invoicing, then he may be liable even if the amount is more than 1 crore and up to 2 crore. When imprisonment would be 1 year and fine. Actual decision would be taken by the magistrate. And for these certain clauses, the imprisonment can be up to 6 months and fine. This is the offenses. Then we are talking about appeal and revision. There are the 4 levels of appeal in the GST. First, if you are not satisfied with the order of adjudicating authority, you can make the appeal to the appellate authority. Again, if you're not satisfied with the order of appellate authority, that is normally called as commissioner appeal, you can make the appeal to the appellate tribunal, which is not yet set up. It is yet to be set up. And if you're not happy with the decision of the tribunal, then you can go to the High Court, and then High Court not satisfied, then you can go to the Supreme Court. These are the 4 levels of appeal mechanism in the GST. The first order, adjudicating authority, not satisfied, then you can make the appeal to the appellate authority. Appellate authority are nothing but the commissioner appeal. So if the order is being passed by the joint commissioner or additional commissioner for which you like to make the appeal, then the first appeal lies with the commissioner only. But if the order against whom you are like to make the appeal is being passed by the assistant commissioner, superintendent, deputy commissioner, etc., then the first appeal would lies to the joint commissioner. Second appeal would always be the appellate tribunal. Second appeal would always be the with the appellate tribunal only. First appeal has to be made within 3 months from the date of the decision. Condonation can be 1 month, and final acknowledgement within 7 days by prescribed on submission of the prescribed document, and appeal application 6 months from the date of the communication of the decision. Counterparty means the government can also make the appeal within 6 months from the date of the order. Then, so let me verbally tell about the appellate tribunal only. The tribunal, I can say in the GST, the concept is being divided into part. One is the principal bench, and then the second is state bench. One is principal bench and second is state bench. What is the principal bench? The principal bench will be located in Delhi only, and they will look out the matter which is related to place of supply. Other matters, the appellate tribunal, other matter will be looked by the state benches only. मैं repeat करता हूं. I'm repeating once again. If the order passed by the appellate authority are having one matter on the place of the supply, then the appeal would be lies with the principal bench of the appellate tribunal. And if the order of appellate authority is not having the place of the supply, then the appeal would be lies with the state benches. Again, if you're not satisfied with the order of the state bench, you can appeal to the High Court. But if you're not satisfied to the principal bench order, then the appeal directly goes to the Supreme Court. That is the difference. Appellate tribunal is not yet established, yet to be established. Probably it will be by next January, it will be made operational. And then there is a concept of revisional authority. What is the revision authority? It says that subject to the provision of section 121. So 121 says that non-appealable order. Certain order are not appealable, like order of the prosecution, not appealable. Order for transferring the matter, not appealable. The revisional authority may on his own or information from the commissioner examine the record of any proceeding, and if he considers that any decision is erroneous and insofar as it prejudicial to the interest of the revenue and is illegal, improper, or has not taken account certain material fact which was available at the time of the order, he may stay the operation of the such decision as he may deem fit, and after giving the reasonable opportunity of the being heard, after making the inquiry, pass the order, including enhancing, modifying, or annulling the decision. Enhancing means amount is being increased, modifying it has been changed, or annulling means entire demand is being cancelled. Then the revisional authority shall not exercise the power. The order has been subject to the appeal or period specified under section 107 subsection 2, that is 6 months, not yet expired, or more than 3 years has expired. So between 6 to 3 years, between 6 months to 3 years, order has already been taken for the revision at an earlier stage. Order has been passed in exercise of the power. Provided that revisional authority may pass an order on any point which has not been raised or decided in an appeal before the expiry of the period of 1 year from the date of the order, or before the expiry of the period of 3 years as referred in the clause B, whichever is later. Then advance ruling. Advance ruling is a mechanism. Advance ruling is a mechanism by which any person, whether registered or not, can ask the following question. Second point, that the supplier only can ask the question. The recipient cannot ask the question with respect to outward tax liability. Third is, it can be for the present or for the future transaction. Either you are doing the transaction for which you have the question, or you will do the transaction in future, meaning thereby you cannot ask the question which is for the past executed transaction. What are the question? Question can be classification, applicability of the notification, time of supply, value of the supply, ITC, determination of the liability to pay the tax, applicant is required to be registered, or whether my transaction is a supply or not. It means if you see that you cannot ask the question with respect to place of supply. The application can be made in the ARA 01 and with the fees of the 5,000 CGST, 5,000 SGST, total 10,000. Once the order is being given by the appellate authority, that decision is binding on two persons. One who is applicant and second the officer, jurisdictional tax authority of that applicant, meaning thereby, suppose I have asked any question on the ARA appellate authority and appellate authority have given the decision. Now, even if you are dealing or you are engaged in the same business, still that decision is not binding on you. Advance ruling shall be binding till the period when the law of fact circumstances supporting the original advance ruling has been changed. Triple AR. Suppose if you are not satisfied with the order of advance ruling authority, you have the one level of appellate mechanism, that is appellate authority for advance ruling. You can go for the appellate authority of advance ruling. Time limit is 30 days from the date of the decision of the order given by the advance ruling. Fees of 10,000. Department can also make the appeal within and wherever it is possible, then decision has to be given within a period of 90 days. The next is miscellaneous provision. Now we have reached up to the end of this today class, and this is the last chapter, 24th number. And miscellaneous provision, I will take up some provision. Again, I can say I am not covering all the provision. It is not possible. I have taken certain important provision for you, and I have listed the same. All the PPTs which I have used, that will be shared to the board of studies, and you in turn can upload the same. So you will have the access of this PPT, rest to be sure. Obligation to furnish the information return. Any person, taxable person, local authority, income tax authority, banking company, electricity board, registrar, motor vehicle registering authority, right to fair compensation and transparency in the land acquisition, etc., collector, stock exchange, ROC, GSTN, etc., UIN, they were who is responsible for maintaining the record of registration or statement of the account or any periodic return or document containing the detail of the payment of the taxes or other detail of the confirmation of the goods or services related to bank account, consumption of electricity, etc., shall furnish the information return such period, such time as may be prescribed. 151, power to call for the information. Section 151 is giving the power to the commissioner or any officer authorized by him, direct any person to furnish the information relating to any matter dealt in connection with this act. 152 is saying bar on disclosure of the information. Whatever the information is being collected, that will not be disclosed without prior permission. 153, taking the assistance of expert. So officer not below the rank of the assistant commissioner, they can take the assistance from any expert. Power to take the sample. So if the commissioner by him may take the sample of the goods from the possession of any taxable person where he considered it necessary and provide the receipt of the sample so taken. Burden of the proof, it lies on the person who is taking the ITC. Where any person claim he is eligible for ITC, the burden of proving such claim lies on that person. So he has to prove that all the condition of 16 subsection 2 has been satisfied, like the goods or services has been received, he has the proper tax investment, etc. 155 says that he was eligible has to be proven by the person who is taking the ITC. Protection of action taken against under this act. So no suit, prosecution, or other proceeding shall rise against the president, state president, member, appellate tribunal, etc. For anything which is good faith done or intended to be done under this act or the rules made thereunder. So no, this is, I can say that protection has been given. Service of the notice in certain circumstances, so this is very important. Any decision, order, or summon, notice, or other communication under this act or the rules made thereunder shall be served by any of the following method: by giving or tendering it to the messenger, including the courier, to the address on the taxable person or his manager or authorized representative or advocate or the tax practitioner holding the authority to appear. Then it can be sent through registered post or speed post or courier with acknowledgement. By sending the communication to the email, by making it available on the common portal, by publishing on the newspaper. If none of the mode is practicable, then by affixing at last known place of the business or residence. And if such mode is also not practicable, then they will affix the copy on the notice board of the office. What is the common portal? The government, on the recommendation, the council notify the CG, Common Goods and Service Tax electronic portal. We know that www.gst.gov.in, e-way bill का अलग website, e-invoicing का website. So there are the common portal which facilitate the registration, payment of tax, furnishing the return, computation, and electronic e-way bill, and carry out such other function as may be prescribed. Special procedure for certain process. The government, on the recommendation of the council and subject to the conditions safeguard as may be prescribed, notify certain class of the registered person the special procedure to be followed by such person, including with regard to the registration, furnishing of the return, payment of taxes, and administration. The perfect example, recent perfect example, that the person who is dealing in the tobacco, pan masala, etc., they have, so government has issued the special procedure for doing the audit of the machine which is being used for the production. So that notification has been issued by using the power of section 148. Then CGS, goods and service tax compliance rating. Every registered person may be assigned the goods and service tax compliance rating score by the government based on his record of the compliance with the provision of this act. The GST compliance rating, as of now, it is not yet started. Yes, it will be started in future. A GST compliance rating score may be determined on the basis of the parameter as may be prescribed. So again, there will be the some rule which will decide the parameter for calculating the rating, but rating will help. The GST compliance rating may be updated at periodical interval and intimated to the registered person and also placed in the public domain as may be prescribed. So this is very useful. So by this, I have completed my today class. Now over to you for asking any question if you have. From my side, today class is completed. If you have any question, you may ask the question. Any question if you have, kindly ask. Thank you very much. So from my side, today class is completed. Ashokji, we can conclude our today discussion, today class. Good night, sir. Good night.